Welcome to Real Estate Game Changers Radio, featuring real estate trendsetters and industry influencers, sharing tips and strategies to help home buyers and home sellers get the most out of their next real estate transaction. Now, here's your host, Suzanne Doyle-Ingram.
Hello, this is Suzanne Doyle-Ingram with Real Estate Game Changers Radio, and I am so excited to introduce you to my guest today. This is something a little different for us because Catherine Ellis is a mortgage professional, not a realtor, and she has a very wonderful view of mortgages and lending and all things money. She works for Xeva Mortgages, and she's in Vancouver, Canada. And not only is she a mortgage professional, she's also a wine enthusiast. And so she's worked and traveled all over the world. She's really amazing. She has her WSET, which is the Wine and Spirits Education Trust, certified level 3, and she has a blog all about wine as well, which we can talk about later. She always puts her clients first. That's what I love about Catherine. And she feels that her clients' financial future is her number one concern. And she really understands the barriers that many people are up against that can make us difficult when dealing with banks. I'm sure listeners can relate to that. So also Catherine has a degree in finance and management from the University of British Columbia, and she became a mortgage broker in 2013. And so she's got all sorts of designations, like she's a member of the MBABC Mortgage Brokers Association of British Columbia and the Mortgage Professionals of Canada, and she has an MBI certification from the Mortgage Broker Institute. And so we're gonna get into this interview right away. I could go on and on about Catherine, but I would like to say welcome to the show, Catherine.
Thank you, Suzanne. I really appreciate you having me on today.
Well, I'm excited to chat with you because I think it's really interesting. As we spoke a little bit before the interview, we were talking about, just the whole real estate situation in Vancouver. I mean, it's similar to other cities across America for sure, but let's start with, let's imagine someone, our listener today, is not a homeowner and they're thinking about buying a home. I would really like to have them truly understand what a mortgage broker does and how that is different than working with the bank.
Okay, great. So this is a question I get asked all the time, and the main key factor I like to let people know about a mortgage professional is that our services are free to you. We're taken care of by the lenders on the A side of lending. We have access to over 40 lenders. So what that means is at your branch, they might only have a certain product box or situation that you would fit in, whereas with a broker, we have access to all the lenders, the big 5 banks alongside monoline lenders and private lenders, which allow us to fit a product which is best for your needs. We're also an expert in the field. So what that means is I concentrate all my efforts on the mortgage side. How can I structure it best for you as the client? And how can we build a plan for your future, not just for this mortgage, but for your next mortgage and all the way up until retirement?
Okay.
So I want to choose a product which is best for my clients and for their personal wants and needs. So we have access to those lenders. We educate ourselves on their products, and we've built relationships with them. So when a client comes to me and they're looking for their first home, I'm able to structure and choose the right product based on their individual needs.
Oh, that sounds great. And so different than, like you said, going to the bank, and the bank just might have, 3 different products, and they say, oh, you don't fit, sorry.
Yeah, and it gets people down, and they a lot of the time, not putting down the banks, they do great things, but they don't always explain in a manner that the first-time homebuyer or retiree will understand. So a big thing with that is you might go in and they say, sorry, no, decline.
Yeah.
For people that are self-employed or own multiple properties or don't have a normal down payment, all of those items come into consideration, and don't get let down because there most likely is an option for you, or we can work on a plan to get you to that point where you are able to have a home ownership.
Yeah, absolutely. Well, that sounds fantastic because, and I know a lot of the American listeners might not know this, but Canada has much stricter banking laws, which is why we didn't have a huge mortgage situation that you had in the United States. in 2007, 2008, 2009. In some places it's still ongoing. There's still tons of foreclosures. However, having said that, I think working with a mortgage broker is really beneficial all over Canada and the States because of all the options that are available. People don't realize all the options that are available. So one thing I wanted to ask you about is, you touched a little bit on how, you help someone not just with a mortgage for this home, but for the rest of their lives as well. And can you talk a little bit about, can you explain to your clients about their line of credit and their insurance and their financial plans and all that kind of stuff?
Yeah, so a big item that I tell people to concentrate on with home ownership and starting a plan is to first build a budget. Sit down with a financial planner, with your mortgage broker, with your insurance professional, as you would. Your broker can always refer you off to people, or your financial planner can as well. Mm-hmm. But the best thing to do is to build a plan. So with that, there's a multitude of products, but you've got to structure it in a way that's best for you. Mm-hmm. In regards to building a plan, when you go into the bank, they're providing you with mortgage advice, but they're also providing you with financial plans, bank accounts, line of credit, and insurance. So the issue with that is that they have so many products that they're unable to be a direct representative of just one and be a specialist at that item. Mm-hmm. It's great to find a financial planner who can help you build it based on your personal needs, an insurance professional, and also a broker who can really hone in on those specific items and report back to each other to make sure it's done correctly. Okay. If you're going with the big banks, there can be penalties. So if you don't structure your mortgage, you don't structure your line of credit correctly, or that you don't get the right term or product, mm-hmm. the penalties can be exponential. They can be huge. They can be anywhere from $10,000, $15,000, $20,000 if you're to move or need to relocate or get a new job and have to go to a new location. Oh. Those are all factors that you need to take into consideration.
Oh, right. I never really thought about that. And so if you sort of you want to change your mortgage before it's up, you have those huge penalties.
Yeah, so there are a couple different products. So I can just run through them for you just to give everybody a quick overview of what they are.
Yeah, that'd be great.
Because a lot of people concentrate on rate, fixed versus variable. What's the best interest rate you have? Yeah. Sometimes the best product you're going to get offered by the bank, by your broker, and so on isn't the right product for you. So the big discussion at the moment is fixed versus variable rates. Every homeowner asks, what do you recommend for me? What's going to be the best over the long period of time, and so on. Yeah. My big thing that I tell people is, what's your comfort level? If you're a savvy investor and you watch the markets and you want to get the best bang for your buck, at this stage in the game, there's not a big difference between fixed and variable rates in Canada and in the U.S., but over the next 6 to 12 months, there might be an adjustment or a shift. Yeah. But if you're buying your first home and you're on a strict budget and you want to know what your payments are going to be, I recommend fixed, because you know what it's going to be. You have the ability to sleep at night, and the difference isn't it's not going to be a huge difference in your payments. Yeah. And I just recommend it to people who aren't going to be watching the markets. I will let my clients know when the rates start to shift, but just to let people sleep at night. Yeah, I think that's a good idea, especially for a first home buyer, because they're so nervous and everything's new to them. So if you say, this is your payment, it's going to be your payment for the next 5 years, then they can feel better about it, right? They can feel better about it, yeah. And I think the big thing is to, if they're planning to be in that property for a minimum of 5 years, there's no issues in regards to the penalties. Fixed rate mortgages do have a larger penalty than variable rates. Variables are based on a 3-month interest rate penalty, whereas fixed are normally based on an interest rate differential. So that's the difference between, it's a complicated figure, but what you're currently paying and what the posted rates are, which are normally substantially higher at the time of breakage. So it can be a large penalty, which leads me into the next point. So a big item with products which people aren't always aware of, and if your branch doesn't allow you to do this, or your bank, you might not know about it. So certain mortgage products are portable. So what that means is you can move the mortgage with you when you move. You can increase it if necessary. You can increase the term of the mortgage depending on where you're going, what your plans are. But certain monoline lenders and banks will allow you to move the mortgage with the property as long as you qualify at the time of the move.
Yeah, that's funny. I don't even have any idea if my mortgage is portable or not. I've never even heard of that.
Yeah. So people aren't aware, but I have clients quite often who will say, hey, I'm buying this house. We love it, but we might have a kid in the next 2 years, and it's a one-bedroom apartment.
Oh, yeah.
So what do you think? And I say, you know what? Let's make sure we have a portable product because the property might not qualify at the time, but a lot of the time it will. So that's definitely a factor that people should take into consideration and ask when before signing the paperwork. Yeah. Another item, which is a product I really like because I've dealt with quite a few investors and people with rental portfolios and looking to invest their additional funds that they might not be using on their mortgage, is the readvanceable products. So a readvanceable mortgage, people might have heard as a HELOC, or they might have heard of as a HELOC stands for home equity line of credit, or they might have heard of an all-in-one, which is readvanceable, a multitude of different names that the banks use for it. There's a few lenders that use it, and it's a niche product. So with it, it allows you to use the equity in your home as you pay down your mortgage, up to 80% of the value. So it's not a product for everybody, but people that are good at managing their finances, have some cash flow coming in, might be paying down their mortgage faster than expected, but hoping to invest in other items or do future renovations or reinvest the funds. The readvanceable product is a great item to look at because it allows you to diversify your mortgage portions. So say you're looking and saying, well, I don't know fixed or variable. You can get multi-portion mortgages that allow you to get a fixed portion for this, a variable portion for this, and a line of credit for the remainder because, okay, we only need 70% of the loan now, but we want access to that other 10% and the equity as we pay down the principal. So it's a great product for the savvy investor and for realtors to consider for their clients to maybe discuss with their brokers when they're looking at building a rental portfolio and utilizing the equity in their home.
Oh, that's fantastic. Yeah, that sounds like something definitely people should look into.
Yeah, for sure. And there's a few niche lenders that allow you to use this product. It's not available through every lender, but there are certain lenders that do offer it, and I think it's a great offering for certain clients.
And so HELOC stands for home equity line of credit.
Yes, so that is the line of credit portion attached, and the readvanceable mortgage is just as you pay it down, you can put new portions into different mortgage segments, or you can have it as a line of credit, which you can use at your freedom.
Yeah. You know, what's interesting about that is I think that, I know you work with a lot of first home buyers, and, when you're a young family or you're just starting out and you're thinking you might have 1 kid, 2 kids, 3 kids, who knows? Look what happened to me. I got 3 kids all of a sudden. And that line of credit is nice to have because things happen and, it's life with everyone, sometimes, you might have, you got to flood and you got to redo the floors or what, these things happen, and having access to money when you need it is really, really good to have. Yeah.
And there is, one other item too that people aren't already always aware of, which is another product, is Purchase Plus Improvements. So that's a mortgage product that a lot of the lenders will offer that allows people to include home renovations in their new purchase.
Oh, wow. That's great.
Yeah, so it's up to 20% of the property value, or a maximum of $40,000 with most lenders. Some a little bit less, some a little bit more, but that's sort of the ballpark. And they'll include it in your mortgage, and then as the renovations are completed, they'll release the funds once they've come in and checked to make sure they're done. But it's a great way for people, if they find a home that it might not be exactly as they wanted it, but it's in their price range, and they might have $20,000, which is below their budget or so on.
Yeah, they can need a little bit more. Yeah. Oh, that's a good idea. Yeah, especially if there's something that, that not just aesthetic, but really needs to be done. Like they need to fix the furnace or the fireplace or something that, has to be done, and they don't have that extra $10,000 or whatever. That sounds like a great way of doing it.
Yeah, and it's great for people, especially, and to work with realtors as well, to allow them to show their clients. I have a lot of items that I can do cross-referencing, showing, look what this place would look like if you redid the kitchen, or look what it looked like if you put in hardwood flooring or redid the deck. So it helps people in envisioning what the place will look like, because a lot of people have their dream home of what they'd like, and it's difficult to see past it when it's
not on their budget,
right?
Yeah, totally. Okay, so what I want to ask you next is, thinking of a first home buyer, I know, it can be such a shock when you're thinking of you don't even know the unexpected things that'll come up. So tell me about the costs that a first home buyer needs to take into consideration when preparing to buy a home. And so the listeners need to get all their pens now and write all this stuff down.
So the main items that you really need to consider when buying a home is first, budget. What's your budget? What's your monthly overhead? What are you comfortable in spending per month? And that's something to determine first with your broker and partner, and just to sit down and see where you sit. But the costs that you're going to need when purchasing, down payments. So that's a big thing that people consider every day. In Canada currently, the minimum down payment is 5% of the first $500,000 and 10% of the balance. So what that means is that on the first $500,000 of your mortgage, if you're buying a $500,000 property, you only need $25,000. If you're buying a $600,000 property, well, you're going to need the $25,000 plus $10,000 for the remainder. If that makes sense. So a total of $35,000 for a $600,000 property.
Okay.
So it makes it more affordable for people to get into the market, and the source of where those funds come from can come from a number of different resources.
Okay.
Number one that I tell people is gifted from immediate family. So your mom, your grandparents, your sisters, brothers, your dad, those are all options of where the funds can come from, if they're willing to help you out along the way. And it can also come from the sale of existing property. So if you do already own property and you're looking to sell it, it can come from the proceeds of the sale. For first-time home buyers in Canada, you can do it from an RSP takeout. So what that means is that you can take out a maximum of $25,000 per individual on a first-time home purchase.
And your registered retirement savings plan?
Yes. And you can pay it back over a period of 15 years. So what that means is you have to put those funds back in over a period of 15 years following the withdrawal, but it allows you to take those funds out tax-free at the time of purchase. And get you building equity on a home.
I think it's great that you have to pay it back too. That's a really good, I think that's kind of a good rule.
Too. Yeah, because it allows people to continue to add back to their RSPs and plan for their retirement. But be able to get into the housing market when things are a little bit tight.
Yeah, that's good.
And also some people might not know, but if you are a couple purchasing a property and you are common law or married, you can take out a $50,000 amount combined.
Oh, okay. Interesting.
Yeah.
Okay. So how else can people get their down payment together?
How what? Sorry?
So I was just saying, well, what are some of the other ways that people can get a down payment together?
Yeah, of course. So joint savings. So I've put some clients on plans previously. Might be a year out and they start putting away $500 a month or $1,000 a month they're putting away. It can be through savings, investments, stocks, if they take them out, registered investments, GICs, all of those options are there. If you don't know how to begin saving for your down payment, sit down with a mortgage professional, sit down with your financial planner and start building a plan. Even putting away a small amount every month can get you there, just chipping away at it. And you can get there sooner than you think.
I think some people think, oh my gosh, I'm never going to get $25,000 together, but it's amazing how you can cut back on the little things that you're spending money on, and it really adds up.
Yeah, and another thing is I've pushed to people too is you can use a number of items. It doesn't have to be one. If you only want to take $10,000 out of your RSPs, or your parents can only gift you $5,000, well, you have $10,000 in savings.
Yeah.
Well, there you have it. You're already there. You know what I mean? And people have a hard time seeing the bigger picture because it's scary and it's a lot of money and it's a big investment and so on. But there's one other option that I like to tell people too is certain lenders will allow you to borrow the down payment. And it's on certain products and based on your qualifications. But I do like to tell people this just so that they are aware that it is an option. And definitely to ask their mortgage professional what what the terms are in regards to borrowed down payment and whether it's an option or the best solution for them. But definitely something to keep in mind.
Yeah, that's good to know.
Yeah, and then the other cost that I like to tell people about, and sometimes they forget about because they concentrate on the down payment and they forget about the other costs associated with closing.
Oh, closing costs, yeah.
Yeah.
And that always sort of scary to me. I mean, I've bought and sold several houses, and I think there's all these extra fees, like you sort of forget about, like lawyers, right?
Yeah, so you have your legal fees, you have your property transfer tax, property insurance, moving costs, property taxes. So there are a number of factors that come in. Legal fees range, so it really depends on your lawyer. They can range anywhere from about $800 to $1,200, depending on whether you use a notary or lawyer, whether you have to disperse debts at closing. All those sort of items come into consideration. But that's a big one. The property transfer tax. So when people are purchasing a property, there will be the property transfer tax. So that's the cost of transferring the property from the current owner's name into your name.
Wow.
And this is currently in BC, it's 1% of the first 200,000 and 2% of the balance.
Ooh,
so
that could be quite a lot.
Yeah, it can be, and it's something to take in consideration. Certain people are exempt from the property transfer tax depending on property.
Okay.
But it's something to just contact your real estate professional, your lawyer, or your mortgage professional and get in touch with us, and we can look into your specific circumstances and see what you qualify for at that stage. But I like people to be prepared for it because it is a cost that you might have to entail at the time of closing.
Okay.
Property insurance, moving costs, and property taxes. So those can range, but I normally just tell clients, and lenders do as well, to have funds set aside for 1.5% to 2% of the purchase price. So if you can have those funds put away,
just to cover everything,
just to cover everything,
yeah, that's a good idea.
Comfortable
to budget that,
to budget that and take that into consideration, because a lot of the lenders will ask to see it. And I also just like to make sure that when my clients sit down with the lawyers, they're not getting asked for funds and they're not calling me panicking saying, hey, I'm $3,000 short, I'm $1,500 short, what do I do? Because when you're making the biggest investment of your life, you want to be prepared and comfortable going into it. So
yes, absolutely.
Yeah. So I think those are important ones. If you're ever looking at building a plan or have any questions or need a spreadsheet, like reach out to me. I have them all available, and your mortgage professionals in your area will too.
Oh, that's great. Yeah. Oh, that's good to have a spreadsheet. I love spreadsheets.
Yeah, so do I.
See it all in front of you. Yeah, that's so good. So I want to ask you, this is kind of, I don't want to throw a curveball at you, but I'm just curious, obviously you recommend people get into homes and get into real estate, but can you talk a little bit about renting versus buying in Vancouver? Because it's so expensive to rent and buy here.
Yeah, so it's the constant battle here in Vancouver. I think in our market especially, having grown over 40% is massive, right? We're a bit of an anomaly. We're landlocked, as some of the major cities are, and so it's hard for us to grow out, right?
Yeah.
The big item is the best thing about renting for individuals, and I'll say it, is you can move when you want, wherever you want, and it makes it very flexible, and you don't have to commit to a certain location. I think that's a big thing in Vancouver for people. They want a new and sparkly apartment, and they want to live in the city core. And if a job opportunity comes up in London or in Calgary or in the U.S., they want to be able to move it at a moment's notice. And I think that's a big item for people.
Yeah, especially when they're young professionals in their 20s and their 30s.
Right? Yeah, and people changing careers more often, and also the ability to move and shift with work, and work being able to be done online a lot of the time, people being self-employed, it makes them more mobile. So I think that's a big item currently. But in regards to buying, I just tell people this all the time. I've invested in real estate, I've invested in stocks, I've invested in mutual funds and so on. But the big thing about buying property is you're building capital. You're paying down your principal, and it's a solid asset.
Yeah, for sure.
It's the land value. It's building on something that is your nest egg that you're going to have for a long period of time. Yeah. And it's something you can build on, develop and change as time goes on. I think a big item is that when you're renting, you're paying someone else's mortgage. Every month your rent payments are going towards their mortgage, and you're not building anything that is a solid asset for yourself.
Yeah.
So that money's just going in the garbage every month, except for you being able to live there. Whereas buying, you're paying down a portion of principal. Yes, you're paying interest, but a large portion is going towards the principal in the property. Mm-hmm. So that's something I like people to consider. There are other costs associated that I can get into as well, but those are the main things people have to consider, and everybody has different wants and needs. Mm-hmm.
Yeah, but when people talk about, I know people who are firmly against home ownership, and their argument is that they pay rent, they can move at any notice, and they love all that thing, but that aspect of it. But they also, I say to them, but are you putting $1,000 or $2,000 or $3,000 a month every month in savings or investing? Because you don't have anything if you're not doing that. And that's what I love. I just love looking at how much my home is worth because it makes me feel like so excited to know like we're paying down our mortgage and it's like all ours. This is a huge asset,
Yeah, and the thing is here too, people are saying, oh, it's way too expensive to get in. It's like, well, the mortgage payments on some of these properties you're living in would be X, whereas you're paying Y, which is quite substantially more. Like people are paying on average rents like anywhere from $1,500 to $2,500 a month for an apartment in Vancouver, right? They don't realize that
I know people that pay $2,200 a month for rent. My mortgage is less than that, and I have a 5-bedroom house.
Yeah.
So it's crazy.
But it's all depending on their comfort level, and I agree with you 100%. It's forcing you to invest in your future. It's forcing you to put money aside every month, and although you're paying to be there, you're also paying into an investment for your future, right?
And you know what? I've got to tell you, before James and I bought our first home, we were renting, like you said, beautiful, shiny, brand new condo in Vancouver, and we had our first baby. And I remember James saying, we should get into a house. And I looked at him and I said, what do you mean by that? You mean like go and get what? Like rent a house? And he said, no, we should buy a house. And I was like, no way. We're never going to qualify for a mortgage. There's no way. I'm self-employed. You have a crap job. And we were really young. And so my mom was a realtor, and she said, I got a mortgage broker you got to talk to. And that's what I loved, was just, opening up the possibility. And so we went to her open-minded. We said, here's our situation. And lo and behold, we qualified for a mortgage. And I don't think we would have if we'd gone to just our regular bank. And that's what I loved about working with a mortgage broker, is that she actually got us into our first home. She helped us believe. We went to her thinking we're never going to qualify, and next thing you know, we did. And thank God we went to her.
Yeah.
It's amazing.
And that's the thing, because sometimes when you do go to the bank and you get told no, you just accept no, right? Yeah. You've done all your banking there. Yeah. They've handled all of your assets. They know how much money you're making. They know they handle all of your credit and so on. It's one of those things where people are like, okay, well, they know what's best, but sometimes it's nothing against the banks, just due to their risk factor or what they're interested in investing in and what their securities are. You just might not be the right fit for them, whereas other lenders might love self-employed is one of the most difficult markets to get funding for, to qualify for, based on the way that we show our income. And both of us being self-employed know that. But I've worked with a number of self-employed individuals, and now I have certain lenders that I love working with in regards to their products, their offerings to the self-employed, and the way that you have to show your income is great. And each individual is different. But when working with a mortgage professional, we concentrate on that. And right off the bat, I can go, okay, what did you show on your income last year? Okay, what can we do for you? And it really helps in determining the best option for you instead of you having to shop around, right? There's enough stresses with buying a home and with refinancing or moving to a new place and so on. And I think that's a big thing to concentrate on with people, is that we'll do that for you. We'll do that side of the work, and we'll ask you for what we need, but that's what we're here for, rather than you having to go bank to bank, knocking on the door, trying to get the solution, right?
Absolutely, yeah. You do all the work. Basically, you don't get paid until you actually find a mortgage for them. So you're going to keep going and going until you find one for them.
That's exactly right.
Yeah. Well, that's fantastic. It sounds like a win-win to me. And that's the other thing too, is the your clients that work with you, they don't actually pay you, do they? You get paid by whoever that you get the mortgage from. Is that how that works?
So how we get compensated is in regards to the A side. So that's the classic lending guidelines. We are compensated by the lenders.
Okay.
So the reason that happens, people will sometimes go, well, why are they paying you? Why are you choosing them? Is we have your best interest in mind. As a mortgage professional, I want to get you the product that's best for you. Yeah. I'm not going to go with a lender because of their compensation. I'm going to go based on what your individual needs are, because I want you to come back to me when it's time for renewal, when you're moving, and refer your friends and family. And I'm building a relationship for the future. I don't want to just do the one mortgage for you.
Yeah.
And I think a big thing to concentrate on with people is the banks are dealing with us and the monolines are dealing with us. And the reason they have these product offerings is they don't need to have an office and they don't need to have mortgage professionals sitting there educating clients and bringing the clients in the door. Mm-hmm. They're saving on the overheads of paying me a salary or having me have an office space in their building and so on. Yeah. So by doing that, they're able to compensate us by bringing in the volumes and structuring the deals that fit their market and what they're looking for, and based on productivity. So
yeah, that makes sense to me.
Yeah, and I will say that on the private side, if someone did need private financing mm-hmm. or needed a private loan and that sort of thing, mm-hmm. on those situations, those are compensated by the borrower a lot of the time. But it's all situational on that
right.
stage, and that's something that would be discussed up front.
Yeah.
But in regards to buying your first home or refinancing or at renewal, our services are free to you. We are first in the market, and the lenders pay us. So that's how.
Yeah. And I think that once you find a mortgage broker, the right mortgage broker for you, you should stick with them, because they've, it's the same as in real estate as well. I mean, it drives me crazy when people jump around from realtor to realtor without really realizing this realtor has shown you all these houses. They've done all this work for free. They've never been compensated until they sell a house. Or, whatever the end result is. And I think, stick with your, like I have my insurance guy, I've got my Edward Jones guy, I've got my, stick with my professionals. And I don't know, I think it's something that's not really discussed very often, but a lot of people don't have a salary and they just get paid when the deal closes, like realtors too.
Yeah.
So, I think it's really good to sort of stay loyal, So tell me about when people say to you, like, what are your biggest tips for first-time home buyers? What do first-time home buyers need to know?
So the main things they need to know is I got the main 3-4 steps of home ownership, and the first one's getting pre-approved and getting your financials in line. So getting pre-approved, people don't realize, is it's fast, it's complimentary, it's efficient, and it's smart to know what your budget is. And I think that's really important.
Yeah.
If you have any outstanding items on your credit report that you don't know about, because people don't check their credit every day. And even if you do, it might not show up on your end, and it might on mine.
Yeah. Wow. Yeah.
Yeah. An old Sears card. Personally, I had a movie account which hadn't been used in years.
Oh,
and there was a collections outstanding. Like, these happen every
probably
day.
Like for $7 or something.
Yeah. And it was like 9 years ago, and it was still sitting there.
You didn't know.
And and nobody, and I went to go and rent a place, and they went, sorry, you have a collection. And I'm like, what? And it took 7 years to determine, and then it takes another couple months to get it removed. But when it comes time to buying, if you place an offer and you only have 10 days to get financing and something's on your credit bureau, it's good to know, and it's good to know where your score is.
Yeah. You know what? Funny you mentioned the old Sears card, because a friend of mine told me that she, when they went to buy a house, they found out there was this glitch on their credit too. And she's like, well, what is it? What is it? I always pay my bills on time. And they said, it's the Sears card. She goes, Sears card? We haven't had a Sears card for years. And and her husband, this is what happened. Her husband was paying they bought a dishwasher or something like that. I don't know. They got a Sears card and then they paid it off. She thought that they paid it off. But they kept getting this bill in the mail for $25, and he said to her, oh, I can't believe this Sears has this $25 fee on here. I'm not paying it. I'm not paying $25 fee to have a Sears card. And she found out later, she's like, that's not a fee. That's what we owe, because there was a little bit of extra interest they didn't realize or whatever. And so anyway, he just neglected to pay this $25 balance. And for some reason, they never heard anything more about it. Or maybe he just, I don't know, threw the bills in the garbage because he couldn't be bothered or something. Anyways, this was all they got it all taken care of. But I thought that was so funny how little husband and wife miscommunication there can really affect your credit.
And a lot of couples don't discuss their credit or their debts and so on. And it's one of those items where, honestly, it's all confidential. If you came with your partner and you're looking to get a place, unless you want me to disclose that you have. If you have your shopping cart, we don't have to talk about it together. But I think the big thing is figuring out. A lot of people have zero interest vehicle loans, but the lenders are going to make you qualify based on the regular payment on it. So when we incorporate that, your qualifications might change a little bit.
Oh, right. So,
yeah. So it's good to know. It's good to find out what's currently outstanding. Okay, is it beneficial to pay down these debts before you buy the place? Is it beneficial to roll them into your refinance or renewal? What's going to help you pay down these debts faster? I think that's a big item.
Yeah, and not to be afraid of it, to go to a mortgage professional, and so just to find out, like you said, it's smart to know what your budget is. I just wrote that down because I think it's really, budget can be a scary word for people. They think, budget means I'm not going to have any money left over at the end of the month. But it's really smart to know what your budget is, because then you know how can you even look for a house, right? If you don't know what you can afford.
And I think it's big to tell people that it helps you determine what your monthly cost is. So, it helps you determine whether you're going to go fixed or variable. Okay, if you're right on the budget line and that's your total comfort zone, then we're going fixed, because I don't want the payments to go up by $50 a month, and that's me stretching you thin.
Oh, yeah.
Also, I always tell people before I tell them what they qualify for, and it's just something that I've practiced and I will continue to practice, is I ask them, what's the total amount of money you're willing to spend in a month? Might be $2,000, might be $3,000, might be $5,000, might be $500. Before I tell them what their qualifications are.
Right, that's a good point. Very. Yeah,
good point. If they're not comfortable, if they qualify for an $800,000 mortgage, but they're not comfortable with the payment.
Yes.
Well, you shouldn't tell them that, because then they might start looking in the $800,000 range.
Yes.
It'll be making them very stressed at the end of the day, right?
That's a really good point, because they get all excited. Oh, we qualify for way more than we thought. And then suddenly their mortgage is $5,000 a month, but they're only comfortable with $3,000. Wow, yeah. Yeah, and a big thing is, and people don't realize, is why start to shop without knowing what you can afford? You wouldn't go to the mall without knowing that you have $100 in your bank account, or some people with $100 in their credit card. You know what I mean? And if you wouldn't walk in and go, oh, luck of the draw, we'll see if I'm able to pay for this. And I think it's maximizing your use of time as well, and maximizing the time of the realtors, and maximizing your time shopping so that you look like an attractive buyer too. Yeah. And also, talk about wasting realtors' time. You know, a good realtor will probably not even take you for homes unless you're pre-approved. Yeah, and that's something that I really preach to the realtors that I work with as well, is let's get them pre-approved, let's see where they're sitting, so that when they do make an offer, I can be comfortable in telling you, hey, we need 5 days to obtain financing based on the property, but the clients are good to go. Yeah. So that's a big item. You check everything. You know the old Sears bill is not, not on their credit and all that.
Care of it. Yeah. Another big item is, so as we talked about, staying mindful of the budget. So that's a big item, is remembering to include not only just the mortgage payment, but your tax, your utilities, your heat, and your internet. I said in regards to comfort levels, and just making sure that we incorporate all that in. And I go to the clients before and signing anything and go, look, this is what your month's going to look like. Let's keep an extra $200 in case of miscellaneous items occurring, and making sure that, okay, maybe this house is a little bit out of your price range, but what are you willing to let go? Are you not going to buy a new pair of shoes this month, or are you not going to go out for dinner twice a week, only once? And kind of coming to terms with them on what they're willing to let go in order to have home ownership. I always say to my client, like my clients, my book writing clients, I always say sometimes you have to do what you don't want to do to have what you want to have. So something's got to give, right? Like, oh, what do you mean I can't go to Starbucks every day? You can't afford it. No, you're not going to Starbucks anymore. Once a month or something like that, But it's amazing. I guess you probably have your clients have those aha moments when you show them how much money they can save if they stop, I know, and that's especially in Vancouver. I think our number one entertainment is going out for dinner, and it's $100 here and $100 there, and the next thing you know, you don't even realize you spent like $1,000 on food. Yeah, and I think it's funny because people don't realize what they're spending money on.
Mm-hmm.
I've done something funny recently, and this is just a personal thing. Is I love going out for coffee. It's a huge thing for me. I love it. I get a coffee out almost every day.
Yeah.
But I've gone from drinking lattes, chai lattes, and coffee's around $5 to getting a Starbucks black coffee small, $2.
Yeah.
And that's making me be able to get a coffee every day rather than 2 lattes a week or whatever it is. You know what I mean? And I've worked it into my budget to do.
Yeah, that's great.
I'll go out with people and they'll go, oh, you like black coffee? You don't like lattes? I'm like, well, I love lattes. It's just not in my budget right now, right?
Yeah,
I'm saving for my first home now. Like, I can't be doing that.
See, and you got to walk your talk, right? You can't tell everyone else to do that and then go have your latte every day.
That's for sure.
That's great.
If they catch me, they're not going to be happy.
Yeah, good.
A big thing is being open. So this is like going back to the purchase plus improvements, being open to other options. So being open to a property that might not be exactly what you want. It might not have the kitchen you want. It might not be the paint color you'd hope for. It might not have hardwood and it's an orange carpet and you want it hardwood. And there's lots of items. The windows might not be what you want, or the bedroom's not quite the size you were looking for. All of these items can be shifted over time. You can incorporate the purchase plus improvements to make changes right at move-in. It's one of those items that you've got to be open to other options. If something comes up that's in your price range, okay, it's not exactly right, but it's pretty close, and you've been looking for a while and you're wanting to get in, there are solutions, there are options, and I think people need to realize that. And when you walk into your first home, it might not be your forever home. So it's just a starting point. You're starting to build equity, and it's a foot in the door.
Yeah, absolutely.
To begin with.
Right.
And you've got to be patient too. Yeah.
Well, when we bought our first home, when we sold it, we made $100,000, and that was only a couple of years later because we did a lot of improvements. I mean, my dad, bless his heart, he did a lot of work on our house because it was kind of dumpy, but it's all we could afford. And you don't have to be all, our neighbors were all older than us, and I thought one thing that they said was so cool. They said, you don't have your dream home when you're in your 30s. You have it in your 50s or maybe your 60s, but it's normal to have a bit of a fixer-upper when it's your first home. And I thought that was so nice to hear that. So that's true about being open, I think, absolutely.
Yeah, and the last thing I'll say on that note is find a realtor. I preach this all the time. I'm sure a lot of you are listening as well, but it's much like a mortgage broker, we work on your behalf. Yeah. So we have connections for the best appraisers, inspectors, lawyers, renovation companies, and more. We know the ins and outs of building inspections, depreciation reports, and strata minutes. So we're there to help you and guide you along the way and help you find what you're looking for. Yeah. And they're really experts of their field. They're experts of the area. They're experts of what you're looking for, and they have your best interests at heart. Yeah. And the best part is that we work on your behalf and are there to support you, but the realtors, same as brokers, are usually compensated by the seller and not the buyer, and therefore it doesn't cost you anything. Yeah. And on top of that, no compensation occurs really until closing. So until you find what you're looking for, they're there to help you every step of the way. Yeah. And I think, as you said before, staying loyal to if your realtor's doing a great job, staying loyal to them. And same goes with your mortgage professional. If you find someone who's great and works with you well, and financial planner and whatever else, staying loyal to them and referring friends and family to them and really telling them what they're doing well and what things they can work on, because we're always willing to grow, right? But I think it's really important to develop that relationship and find someone who's an expert in the area you're really looking to concentrate on.
Oh, I think that's a really great idea. And someone experienced too. Yeah. Because for realtors, just because your cousin just got his license doesn't mean that's the best realtor for you. And that's hard too sometimes, because I think we probably all know 10 or 20 realtors, like friends and cousins and uncles and whatever. But, someone I'm sure anyone listening to this interview knows you're really, experienced and qualified, and you know exactly what you're talking about. Same goes with real estate. Sometimes people, they just don't, if they haven't done enough transactions, they don't have the experience to know what to do. So those are great tips. I love what you just went over there about get pre-approved, stay mindful of your budget, and be open, and find a realtor. Those are really, really fantastic. And one thing I want to ask you about that you touched on very briefly, and I'm like, wait a minute, I want to go back to that. Did you just say that the real estate in Vancouver has jumped by 40%?
It has, yeah. And it's gone up in the last 2 years over 40%. So it's quite shocking. Property values are very high, but there is some positivity coming back right now, that making the future look bright for me and my eyes and for clients, and for new home buyers is with the new implementation of the foreign tax. We don't know the exact effect it's going to have on the market.
Oh, right.
But at this stage, what I can tell people and what I've been telling a lot of my clients is the market is normally quiet in August. We'll really determine what's going to happen over the next few months and what the effect of it is.
Yeah.
But I think something to tell people is the multiple offer, 500 to 500 plus over listing and so on, all these offers above listing price.
$500,000 over listing?
Yeah, I had a client yesterday who told me that the listing price was $850,000, and it ended up selling for 1.3.
Oh my gosh, I cannot believe that.
And it's pretty shocking. And that was just a client of mine that I was just speaking with, and he said, "Yeah, we placed an offer, and now we've given up." And I said, "You know what? Now the market's beginning to. It's not cooling off; it's remaining stable. Prices are remaining stable, and there's still a lot of sales occurring in the Vancouver market.
Yeah.
But I think now there's more opportunity for people to get in.
Yeah.
They're going to have more success when writing offers,
yeah.
and it's going to at least be closer to the listing price.
Yeah.
Normally, the sales are going not 500 on the high end, right? But there are there are situations like that, and I think the big effect is that maybe the premium luxury homes in the Vancouver market, the sales may decrease, and the prices may level out or go down a little bit. But I think in regards to the condos and single-family homes in the Vancouver area, I think those are going to remain constant because there's still a lot of people looking. There's the unemployment rate is very, very low in Vancouver at about 5.6% currently. So there's people moving in. There's job creation occurring. And so why wouldn't you why wouldn't you be looking to buy a home, right? At the moment, people are renting, but I think over the next 6 months, people will begin re-entering the market that we're looking for their first home, and they'll have more success when they are placing an offer. That's sort of my outlook on where things are going.
Okay, good. Well, thank you for that information about where our market's going. That's really good to know, and it's very similar across the U.S. and Canada, I think, in many, many big cities.
Yeah. Mm-hmm. And I think really depending on what happens in the U.S., especially with the election as well, is going to affect the interest rates in a certain term. It's a little bit more detail involved in it, but the interest rates are really based on two different variables, and I've posted a few articles on it and written about it, but currently with the American market, we'll just have to see what happens. But I think things are looking up, and I think the market's going to remain steady. And I think at this stage, we'll just have to see what happens up until January and then look at the forecast of where things are going. But I'm pretty positive that it's going to be a more attractive market for people to be able to get in. And I just hope people take the chance and start saving.
Oh, yeah. Good. Start saving now. That's great.
Yeah.
Or call you. Speaking of which, how can people get a hold of you? What's the best way?
Yeah, of course. Feel free to find me through my website, which is www.mortgagesbycatherine, so with a C, so CATHERINE .com.
Perfect.
I'm also on Facebook under the same item, so Mortgages by Catherine on Facebook.
Great.
I'm on Instagram at Mortgages by Catherine. You can send me a message through there if that's your platform. I'm available by email.
For the youngsters who are listening.
On email, I'm Catherine at Xeva, so XEVA.ca.
Perfect.
And I'm available by phone at 778-835-4565. And really, if any of those channels, I respond pretty quickly, and I have my phone with me all the time. So any questions you have, whether it be where do you think the market's going, or what's the best rate right now, or how do I save for this, or Catherine, how do I cut down my coffee expenses? Just call me. I'm happy to help.
Well,
or if you're looking for a bottle of wine, I'm there.
Yeah. We didn't even have a chance to talk about the wine, but we'll have to do another one.
Yeah.
Well, thank you so much for coming on this interview today, and it has been so informative. It's really, really great information. I really appreciate it, and really, unbiased, just facts, and I appreciate that so much. So thank you so much for your time today.
You're very welcome, and thank you so much for having me. I really appreciate it.
This has been another episode of Real Estate Game Changers Radio with your host, Suzanne Doyle-Ingram. To hear all episodes featuring our hand-picked real estate game changers, visit us online at www.realestategamechangersradio.com.